no money added since like 3 months ago. Surviving really well relative to the market. Really happy about that. I have a good feeling. I am making this video today though because I think there's going to be a drop tomorrow and I'm going to be falling off of this all-time high. You can see the all-time chart right now in a second here as it loads. It's just a straight line up rebound off of those 3 months that are just kind of grinding lower. Made some really good option moves. I'll show you in a second. Closed out a options position that I initiated that I didn't plan on closing out, but because of the sky high, move, I decided to close it, and I'll take it there right now. We'll talk about that for a little bit, and then we're going to talk about possibly bracing for another downturn and what I may or may not be doing here. So I have some dividend spending. Not too long ago, though, I received dividend from the Russian ETF, which was like $133. That was a big dividend there. I'm a really big fan of the Russian ETF. All right, so here's the position. I rebought my put sell for 3,250. I had sold it not too long ago for 4,200. So I collected almost a grand worth of profit on that single trade. Is $950, which makes up for a lot of the mistakes I've made over the 3 or so years for this account. But really, it's like a 6-month-old account. It was very small for the first 2 years and a half, and I decided to make something out of it. So $950. Let's go and take a look at it more clearly. Apple was up. I exited the trade somewhere around here when I saw that it wasn't going to be going up. This kind of breakout failed a little bit. I think I exited somewhere around here at 154, 153. And so far I've been proven correct. We'll see. I'll be looking to re-enter the trade if there's another drop in Apple. If not, I still own 25 shares. I'm all right. I am in losing territory with those shares, but I've made up my losses in other forms that we'll take a look at in a minute. So let me show you this trade. Um, oh, this is interesting. Average price paid for Apple 169 among Robinhood users, and mine is 175. Oh, okay. So I'm not doing too good compared to the average person, but it doesn't matter. All right, now let's take a look at the trade here. There it is. Boom. 180 put for January 17th, sold at 4,200, rebought at 3,250. Very good. Very happy about that. Who knows? Is it going to keep on going higher? Maybe. And I will benefit if from my 25 shares if that does happen. But so far, we've had like 4 consecutive days up. You can see, and it might be rolling over here into the Friday. The some of the snapback or the I don't want to call it it's not a dead cat bounce, but a bear market correction rally might be getting exhausted. So we'll figure out if that's true tomorrow and the next day. But you can see the week chart looks great, but the problem is if you pull it out to a 3-month chart, this doesn't look that attractive anymore. It's going to be hitting some resistance here. You can't see very well on the Robinhood website, but if you use a different site, you'll see. And look at the 1 year too. It's even if it does pop up, it's still going to be there's still going to be some kind of bottoming process. If you look at the 5-year chart, look, even if it does pop up like this, it's still going to be some kind of a longer bottoming process. So investors are sure that that's as low as it's going to go. It's not going to be just a really short-term V bottom. Like it's not going to go up as quickly as it came down. I mean, can that happen? Sure, but I think that the probability is extremely low, especially with a company like Apple expected to have a much more protracted bottoming process here. So we're going to have more chances to enter the trade, I believe, especially if we're in a bear market at the moment. Okay, so that's enough about Apple. Why has my portfolio done so well? Well, I focus on option strategy mostly now, and I think I'm crediting some of that outperformance to my option plays. Um, I mainly sell out of the money puts, and sell out of the money calls. So I collect a little bit of money. Sometimes I cut it close, and sometimes after I execute a trade. But whenever I do, I just basically buy it at a better price than it would have if I had initiated the trade when I've sold the put. And I mainly sell puts and calls. Very rarely do I buy a put or a call. I have one against Crux here, a $15 put, because I think maybe perhaps the company will crash. But it's just a technical thing. It's a small play. I don't have the 100% conviction. It's just a gamble. And so here is the reason of my outperformance. The main reason is EXK. Look at this 1 month chart. Ridiculous. I made some good plays when it was at 180, 190, but it was as low as 179. And look at the wonderful month and a half or so that it's had so far. From 179 all the way to 227. It's a high cost producer, silver miner. It's my favorite uh, silver slash gold producer. They're about 50-50 silver gold, but we'll call them silver mainly because there are very few of them now, if any, that produce their pure silver plays. This is as silver is going to get. Maybe this one First Majestic or Panther or something. But I really like this company, and I have a ton of look at that. I have 3,000. I used to have 3,250, but I unwound one of those puts sells. I bought it back, so now I have $3,000 worth of collateral, right? And I only have 300 worth of liability left. This used to be 1,000, so I've gained $700 or more actually in erased liability because AXK has been going up. So that's helped offset. And I also had a short market ETF that I've recently sold for $700. That it's like a couple $100 that offset the down market. And I went really aggressive at the very bottom with that Apple play, and I bought a bunch of stuff at the very bottom, and it's helped me rebound quite a bit. And now I'm accumulating cash again. You can see I have 16,800 and I'm about to get a lot more, a few thousand on the 18th once my put sales expire, and I'll be able to re-roll some of my call sales. So the future is looking bright as well. I went aggressive in China. It went against me the first few days, but now I'm actually turning into the positive. And also had a nice play with wheat and precious metals to save my ass as well. You can see here, this is the China ETF, and it went against me at first, but now it was going down, but now you can see there's a strong rebound here. It will probably follow the US markets. They'll probably move in a tandem and it will roll over again, but that's okay. It's not as volatile as individual companies. You can see even though China's been through some major ups and downs, it's only decreased by like 50% and then up by 100%, down 25%. It's not as volatile as one would imagine. Baba, Alibaba, and JD are volatile and do have those. And let's take a look at Alibaba. Had a nice pop today. I'm actually in the profit with that since it went aggressive towards the bottom and bought it. I bought it at 140. Now it's over 151. I have $47 worth of profit here that I haven't realized. It's very important, you know. It's not a profit till you sell, right? That's why I exited that trade. So a lot of things been going for me. Uranium has had a really good time. Energy fuels is back up on the rise. URA is on the rise. You can see here during the last half a month, it's recovered like 8%. So, it isn't a downtrend, URA as a whole, but if you look at the long term, it's actually kind of a flat bottoming process. It's trading sideways, as well as the other uranium play that I have, Cameco here. You can see how it's gained quite a bit here in the last week, almost 8%. It's over 12. I'm going to actually have to sell some of it at $12, which is a shame, but it is what it is. I had sold a call for January 11th, and I'm going to have to sell that position at $12, 100 shares of those, but not the other 100. So I'm still gaining a little bit on that. I've got total returns is almost 25.3% here, so that's great. You can see the 3-month chart is pretty flat, and I was expecting it to stay flat, but it's actually had kind of a rise here. You can see it's an upward trend. Cameco, it's my favorite company, period, period, Cameco. And it's a slight upward trend, unlike the uranium ETF, where it's kind of like a bottoming pattern. This one's slightly upwards, and we'll see how it progresses. But I'm expecting it to stay low volatility and just have a grind higher for at least the next 1 or 2 years. And I'll be selling puts and calls around it to try to collect money while I anticipate that sideways movement. And in fact, the whole market I expect to be sideways. The the U.S. market, all markets for the next 10 years, I don't think it's going to be spectacular returns unless something crazy happens, like helicopter money or whatever. If you don't know what helicopter money is, you can just look it up. Google it. Google's your friend. This company I was planning on selling puts on Spotify, but it's already at 122. I wish I had caught it when it was over here before the rally. Look, it was at 109, 108 even, and I missed that opportunity because I decided to go in Apple. But in this company, I would have had an even bigger gain if I had made that trade in Spotify. But I still like the company. As you can see, I own 10 shares of it, and I'm happy about it, even though I'm down 8% overall. I use Spotify. I like Spotify. I think Spotify is going to do well. So it just hasn't really survived the crash, and neither did I expect it to. But I want to have some exposure to this company because I just love their product, if no for any other reason alone. And they've kind of adopted that Amazon model of where you spend, 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 spend to grow, and don't really show any profit, and get as many users as possible, and build a brand and just build great products. And it's a proven method. Amazon proved that it can be a very good return for shareholders, even if it's not a profitable company outright. They can be, but they choose to put the money into more growth, and that's what this company, I believe, does. So it's a proven model, at least for shareholder appreciation, for share appreciation, and that's kind of what we're after here, right? If we're to be honest, I mean, Warren Buffett likes to buy great businesses. I just kind of care more about how much money I have at the moment. All right, now having covered all that, this is likely to drop tomorrow, so I'm going to enjoy it while I have it. The 47K, and we'll see how it happens. There is some good news for me though. Overnight markets, I'm looking here, and it's 9:51 p.m. on the Wednesday. This is kind of an early video for me, which is probably why I'm talking a little bit faster and more than normal. But I can see gold is already up 0.4% at 1,297.2, and silver is at 15.81 per ounce, and those are good numbers. It's a nice little pop here, the night before. So we'll see if that carries through to the morning. And I'm really looking for EXK to be 250 by January 18th. That's what I really want, because then this 300 liability will be erased, and I will collect all the premium, and I'll be under no obligation to make any trades, and I'll also get appreciation for the 1,000 shares that I already have, even though I'm already plus on it, 12.5%. So all in all, my exposure to precious metals has helped me survive the crash really well, and especially to have a strong rebound off of the lows, which we may revisit and even break down. So you can see the 1 year here. This is the crash, the market crash. I'll show you what the S&P looks like. So in the last year, I'm up 5.8%. In the last 3 months, 9.32. All right, 9.32 and 5.8. And if we go to SPY, which is just the US markets, 1 year, minus 4.47%, not up 5.8. And then the 3 months even worse, it's 6.86 versus mine up like 9 or something like that. So a big disparity there, and it's all because of that precious metal play, options play, and aggressive recovery. These numbers were a little bit closer when we were at the bottom, but I was still doing better. That's not to say that I do better than the market, guys, all right? So if you look at a 5-year chart, the market has outperformed me quite a bit because, I've been neglecting this account a little bit and also been invested too heavily into precious metals before, and I had to change that. So here's my old time. You can see only up 11.3%. But as if you recall, even go back to the videos, when we were down here at 41,000 and I was minus for all time, I wasn't really that worried. You can go back and check because I was kind of expecting this rebound here. And now I'm expecting another downturn, and we'll see if I can survive it better. I might load up more on the SH and try to save some money there. I've already allocated some money to short-term treasuries. You can see over here, I told you about this trade on one of my previous vlogs. And so I'm up $1. These are basically short-term treasuries. They don't really go up or down. It's just kind of parking cash. So I've parked some cash here. You can see how it doesn't, it's a very unique looking chart. You can only see this chart in on a financial instrument like this, very nominally based. This is the 5-year chart. It's crazy, right? All right. I think that's about it for today. I've given you all my moves, what I'm doing, what helped me survive the crash, my diversified style options plays, and I'm really curious to see what tomorrow brings. I think there's the markets are going, U.S. markets are going to roll over tomorrow and post a slight negative number, and then on Friday probably an even more negative number, unless there's some kind of crazy news and it gets a pop, which fair enough. And if there is, that's fine. I'll profit from it. I'm still very long heavy in this entire portfolio. There isn't anything really that I'm short on. Um, it's just to kind of diversified, right? I have precious metals, I have international housing, shipping, industrial, energy, uranium, international China. I have bonds, I have emerging market bonds, and I have short-term treasury notes. So I'm extremely well diversified. So I should be able to survive better than just holding the market if there is a crash. And I'm also trying to pull some money so I can make another Apple trade or Spotify trade with options. You can see, so I'll be okay. I'll be surviving. Although these are not my money. This is a margin account. So 30,000 of the money that I have invested are Spotify's are Robinhood's money. My money is only 47,000, but I get to play with an extra 30K. If you go to the amount, you'll see here. Um, okay, it doesn't show. But if you add up all these figures here, you'll see that it's more than 47. All right. I think that's about. Oh, this is interesting. You can take a look at the. All right, the biggest returner so far, look, is C-SPAN. Number one now, and then it's wheat and precious metals. This is pretty crazy. Energy fuels. I remember when Apple was number one just not too long ago, before the big crash started happening. Look, chemical. So uranium, precious metals, and C-SPAN, which is a container shipping renting company. Shipping container. It's a container ship renting company. There we go. And Apple's nowhere to be found. Look, it's not even in the positive. It's way down here in the negative. But that's about to change over the long term. All right, this has made some gains. This is the emerging market fund, but it's still the biggest loser at the moment. Okay, that's enough for now. Um, Looking forward to tomorrow. If something crazy happens, I'll make another video. Probably make one just for fun, but I'll, there's a really high likelihood I'll make another vlog or video on Friday. That's it for today. Hope you all enjoyed the update and figured out some ways that you can survive a crash and benefit and grow your portfolio.